Hi, good morning. It's Dan Moorhead from Pantera. I have my partners, Joey Krug and Paul Vratataki here with me. And then we also have two very special guests, Jesse Powell from Kraken and Jeremy Allaire from Circle. And the Halving is such an interesting event. It's kind of a once in every 4 year Lollapalooza for crypto. People get really excited about it. And I have to admit, early in the days, I was kind of skeptical of it. And now I actually really do believe it has a really profound impact. And I'm excited to have Jesse and Jeremy with us. They are legit OGs from the early days of Bitcoin. I remember a great story about Jesse. We got basically everybody in the crypto industry, as Bitcoin back then, together at my house for some early conferences. And Jesse was so concerned to have everyone. A lot of people come from the Bay Area, and then we're going to go on to the first Money 2020 in Las Vegas after that as a whole group. And so we decided to charter two planes to bring us from the Bay Area there and then on to the conference. And Jesse was so concerned about having the entire project on two planes that he decided to organize carpools. So he had everyone driving up in the brutal Bay Area traffic to get to Lake Tahoe. So they're going to join us for a panel in about 20 minutes to present their ideas on what the impact of the halving will be on the industry. And the perspective I began with when I first heard about it, I was like, well, if it's baked into the formula and we've all known about it for 6 years, could it have an impact? It seems like it has to be priced in. And there's a line that we quoted in our investor letter recently on efficient markets theory. Warren Buffett essentially saying the difference between always efficient and almost always efficient is worth $80 billion to me. And I think that's the thing here is that we all know what's going to happen, but there's no essentially like strategic petroleum reserve of Bitcoin. There's no entity. It's so big. It's $200 billion that there's no entity that can soak up any of the excess supply when it's coming out kind of freely and then sell it back into the markets when it's not. And so the markets really are subject to the supply of Bitcoin. And if you reduce the supply of Bitcoin, the amount the miners are selling every 10 minutes really should have an impact on price. And with that, I want to hand it over to my partner, Joey Krug, to talk about how mining actually works. And then we'll get into the markets themselves.
Great, thanks, Dan. So, yeah, I'm sure a lot of people in this call may be already familiar with this, but for people new to this space, we wanted to just give a high-level overview, sort of what Bitcoin mining is, what is a block reward, sort of what are we even talking about here. And for mining, Bitcoin uses a system called proof of work. And the idea behind proof of work is you can secure the blockchain, you can process these transactions securely using a pretty energy and computationally intensive process. And that's pretty much the entire point. If you could attack Bitcoin with a low amount of energy or a low amount of cost, that would sort of defeat the purpose. So the whole point of proof of work is to make it very expensive to attack Bitcoin's network. And so what happens is miners confirm these transactions in blocks that happen every 10 minutes. And so there's a chunk of transactions that get processed every 10 minutes. And you might ask, okay, well, what incentive is there for miners to process these transactions? And it's a block reward and transaction fees. And in the beginning, when there weren't a lot of people using Bitcoin, the block reward needed to be very high. When Bitcoin first came out, the block reward was 50 Bitcoin per block. Now it just cut down to a little bit over 6 Bitcoin per block. And miners basically purchase this expensive hardware and pay for electricity to run these machines. And these block rewards and transaction fees cover their costs and hopefully provide some extra profit. Although Bitcoin mining is very efficient, and so usually the cost to mine a Bitcoin hovers around pretty close to the cost of electricity and hardware to actually do it. And so then if we look at the halving, the event we're discussing today, sort of what actually is the halving. And the idea is that, well, every 10 minutes a fixed amount of Bitcoin are issued, but every 4 years that block reward gets cut in half. So it's really unique in that the monetary policy of Bitcoin is 100% predictable since day one. And this eventually freezes when there's 21 million Bitcoins, and that's sort of the total amount that there will ever be. And so the inflation rate of Bitcoin is predictable. And over time, the amount of Bitcoin printed is going to continue to decline by half every 4 years.
If we all know it's going to happen, it seems like you probably can't. If we all know it's going to happen, it seems like it probably can't have an impact on price. But it really has had an impact on price massively in the first two halvings. And then each halving obviously gets half as big, or even less than half as big in terms of the impact to the amount outstanding. But this is a graph of what has happened in the previous two halvings. And it really does paint an interesting picture. The shaded areas are a period before and after the halving. And if you kind of abstract back and look at it, really almost all the up move of Bitcoin happens in the period before and after halving. And then the markets really essentially go sideways or down in the other time periods. And although the past doesn't have to predict the future, so there's certainly ways this could not work, if we are looking at the historical norms, Bitcoin has bottomed 459 days prior to the halving. And in this case, it did bottom about that, 514 days. So very similar period. And it's typically had a rally in that period, going up 400% one time, 200%. It's gone up 168% this time. So it has a rally essentially in anticipation of the halving, but effectively before anything actually happens. And then when it happens, it's not like a light switch like the halving was yesterday. The markets aren't up 1,000% today, but over the next, on average, 446 days, it does go up. And the next slide shows essentially why and why it goes up, a bit less each time. And the way to think about it is not all halvings are the same. The first one was monumental. It was a very big tectonic event. There were only 10 million Bitcoins outstanding at the time. And we took away 25 Bitcoins every 10 minutes. And if you add that up over those 446 days after the halving, that's 1.6 million Bitcoins. So we're essentially taking away 15% of the total outstanding supply. So it's a huge, huge impact to the stock to flow of Bitcoin. The second halving, of course, was half as big in terms of number of Bitcoin being cut. So we're only cutting 800,000 Bitcoins over the next 446 days. The important point is by then we already had almost 16 million Bitcoins. So the cut's half as big and the outstanding stock is already 50% larger. So it's only a 5% reduction in the percentage outstanding. So this one, half as big again, lots more Bitcoin. So it's only going to be 2% as of the outstandings. So that gives you those ratios on the far right are the ratios. The first halving was 3 times bigger than the second halving. The second halving is 2.3 times bigger than the third. So on the lower half, it shows the impact on price. And it is absolutely fascinating that the ratio of the price moves is identical to the ratio of the reduction in supply. And so in the first halving, the rally was 3.2 times bigger than in the second halving. And if the past does replicate itself in the future, this would be 2.5 times as big, and so 1,100% rally. And again, the past doesn't necessarily predict the future, but it has a very, it can inform our decisions on how to trade. And bottom line is, I think it's just way more than a 50-50 chance that the Bitcoin market goes up. And the reason this is true is the way miners work is every 10 minutes they are allocated the block reward, and then they sell those Bitcoins to buy faster chips, more electricity, and more rack space. And it's just a never-ending arms race. They're always selling their chips to buy more and more. In that process, they're not holding chips waiting for some, macro event or the next halving or whatever. So if you reduce the amount of chips that are being sold every 10 minutes, it really has to have an impact on price if the demand is constant. All right, and so on the next couple slides, we just wanted to run through what has been happening in Bitcoin in the macro environment, just to bring you up to date, and then we'll begin our panel. One of the reasons I think Bitcoin is such a strong trade is the previous slide actually has a graph plotting both the trend of Bitcoin over the past 9 years on a log regression, and then also the point that was implied by this halving stock to flow analysis ratio. And it's actually highly resonant. They're both basically around the same. And again, I'm not going to say it's a 50-50 shot that we get above $1,115, $212, but I think it's way more than a 50-50 shot that we go way up over the next year or so. And then in the next slide, we have Bitcoin's price volatility, obviously huge. You can see in there, it goes up and down a ton. But this is one of the only assets I am aware of that over 9 years has only had 1 year where the low for the year was lower than the previous low. And so yes, Bitcoin goes screaming up 1,000%, it goes down 85%. It's very manic, it goes up and down crazy amounts, but each crazy cycle is higher than the previous crazy cycle. And we want to just mention that this is, the halving's taking place right at the same time. There's just a tsunami of global macro forces, in my opinion, pushing up the price of cryptocurrency. And the global interest rate policies around the world are literally zero now. It's been close to zero for the last 10 years, but with the pandemic, the US has cut to literally zero, and 60% of the world's economies have their interest rates at zero. So you've got rates as low as possible. On the next graph, we show the scale of money printing that's going on in the developed world. It is, without adjectives, it's so large that you can only compare it to history. The amount of the US deficit is larger than in the Great Depression, and it's actually larger than the average deficits during the years of World War II. And those are just outrageous numbers. And they simply have to have an impact on all things whose quantity cannot be eased. So if you're printing trillions and potentially tens of trillions of new dollars, that's going to essentially float all boats. It's one intended policy is that we seem to be aiming to keep the stock market from going down. That's definitely happened. The stock market's actually up since last May, which, given the scale of this pandemic, is absolutely impossible to imagine absent this huge money printing. And on the next slide, we actually show the impact has been on things that you can't ease their quantity. With this huge flood of money, you have gold being up. Gold obviously is a fixed quantity asset. There's only so many atoms on the planet. And also Bitcoin, there's only 21 million that can ever be created. And so with unlimited quantitative easing, it's pumping up the price of anything you can't create more of. And I think if we look back in a year, these numbers on this screen will be, very, very small. It's going to have exploded. And then just a thought, one of the great macro investors of all time, Paul Jones, just wrote to his investors that he's invested his fund and his net worth into Bitcoin. That's an awesome validation for all of us that have been in this industry for a long time. This is just a schematic of what could happen. Bitcoin's market cap is a very, very tiny fraction of gold. And frankly, it does a lot of things better than gold does. So, at some point it could be worth way more than gold. And that's why I like this trade. It's a very asymmetric trade. You have very limited downside and a huge amount of upside. And Paul said that it reminds him of gold in the 70s when they were printing tons of money and we had runaway inflation. I think we're going to have runaway inflation in fixed quantity things, not consumer goods, because there's so many people unemployed that the price of flat screen TVs is probably not going to go up. But the price of things like gold and Bitcoin are going to scream. And I'm going to conclude with thoughts on Bitcoin. I really, for all of us that have been in the industry, know this, that Bitcoin was created in the last financial crisis, and the Genesis block even included a money printing quote from the newspaper, and the halving included a money printing quote from the New York Times. And so I think over the next 2 years, blockchain, Bitcoin in particular, is going to prove itself out in this financial crisis. And with that, I'm going to hand it to Paul Varada-Talkett for our panel.
Hey guys, I'm Paul Varada-Talkett, partner at Pantera Capital. I'm the guy that's surrounded by all these cryptocurrencies in the space, so you can find me right here. And I've been focusing on early stage investments for Pantera for the last 6 years. I'm really excited to moderate this panel on Bitcoin halving and its implications on current and future state of crypto. with my friends and panelists, Jeremy Allaire, CEO of Circle, and Jesse Powell, CEO of Kraken. Looks like Jesse is about to turn on his, there you go. Lovely Jesse right there in the stock market. And really, I mean, as Dan mentioned, these guys are, you know, OGs in this space, some of the earliest entrepreneurs that I've met. And, you know, I've been with Pantera for the last 6 years. You know, I got into crypto mainly because of Pantera. When I joined Pantera, you know, I didn't really actually have Bitcoin. I was interested in it. And coincidentally enough, I bought my first Bitcoin on Circle. Jeremy Allaire will have to credit him for creating a great consumer product for me to use my credit card and buy my first Bitcoin. So when Bitcoin hits $1 million, I will definitely be thanking Jeremy right here. And I still remember, I still remember, as Dan mentioned, Bitcoin Pacifica and being in Lake Tahoe and having great conversations with Jesse early on in the space about Bitcoin. So, you know, as I mentioned, I mean, I'm really excited to have these guys right here. Thank you so much for taking time out of your busy schedules. We're going to start off with some general questions, and then we'll get on to maybe some specific questions for each of you. You know, you guys have great businesses that, you know, get affected and contribute to the success of Bitcoin. And then, of course, we'll open up to the audience for questions. If you guys have questions from the audience, feel free to put it into the chat, and we'll extract it and bring it out to the panelists. So, you know, first of all, you know, I think we have a diverse set of folks in the audience, everything from investors, entrepreneurs, and even just enthusiasts. So do you guys mind introducing yourselves and, you know, giving a little bit of quick background on yourselves and your companies and how you guys first got into Bitcoin and cryptocurrency?
Yeah, sure. I can go ahead. This is Jeremy. Yeah, I'm Jeremy Allaire. You know, thanks for having me as a guest today. It's a really awesome moment and milestone, and so much context here, which is so relevant. Yeah, my background is as a technologist and entrepreneur in the internet space. Have been building internet-based software-powered companies since around 1994, 1995, sort of watched the birth of the commercial internet and then built companies around digital media. And then really in 2012, became, you know, obsessed with crypto and Bitcoin. And I think, you know, the way I kind of arrived at it, I've always had a sort of strong interest in global political economy and macro issues, and post-financial crisis had found myself more and more drawn into those topics. But I think in particular in 2012, you know, when looking at Bitcoin specifically, you know, I felt like I was sort of seeing the birth of a really critical new set of protocols and a new set of open infrastructure for the internet, sort of a missing layer of the internet. And I have watched over the prior 20 years, like decentralized networks with open protocols have a dramatic impact on society and the world, making information exchange global and free, making communications global and free, connecting people and businesses everywhere. And this idea of a global digital currency that was built on open protocols that, you know, also, you know, back then in 2012, 2013, you know, people were starting to get excited about scriptable, programmable money, issuing other kinds of assets on these blockchains. These ideas were so compelling, and it was so clear to me that, you know, over the next 10 to 20 years, so kind of going back to that point, like this was going to completely restructure the global economic system, the financial system, and be a major part of the sort of story of the internet and what the internet has done to change the world. So that's sort of how I got here. And Circle, I'll talk a little bit more about it in another question, I think, but you know, basically we provide platforms and services to help people use digital currency for kind of real world payments and storing money and things like that.
Awesome. Thank you so much, Jeremy. And Jesse?
Sure. Hi, Jesse Powell, co-founder and CEO of Kraken, which is a digital asset exchange. We got started in 2011. Prior to Kraken, I had a company selling virtual items and currencies for online games like World of Warcraft, RuneScape, MapleStory, Diablo. Did a ton of different games. That was from 2001 to 2011 that I was doing that. So prior to Bitcoin, I had about a decade of experience with the value of virtual goods and virtual currencies already. So I was kind of coming into Bitcoin with the mindset like, oh, this could just be another virtual currency that we sell on our e-commerce website for virtual goods. But after digging into it a bit more, quickly realized that it was much more than that and had the potential to completely change the world in a number of ways. It also got me looking into how the fiat currency system actually works, which until then I hadn't really done much digging into, and kind of figured out like how ridiculous that system was, and just what the real potential for Bitcoin was. With the virtual goods business, Bitcoin was actually solving tons of real business problems for us. From as a digital goods seller, we were dealing with all kinds of issues related to credit card fraud, to the transaction fees on microtransactions or on small purchases. Large contingent of our client base not having credit cards, not being old enough to have a credit card or bank account, needing to ask a parent to borrow a credit card, and kids are smart, they write down the number and then they use it 10 more times. So all kinds of issues with stuff like that. We had vendors internationally who we had trouble sending payments to. We had customers internationally. You have a guy in Nigeria who says he wants to buy $1,000 worth of World of Warcraft gold with his credit card. Say like, no way, dude. And then like turns out he's actually like a prince. So you turn away good business. You can't pay your suppliers. There's all sorts of issues that were solved by Bitcoin for us. So that got us super interested. Not just the potential to change the world, great, but the potential to like change our business was immediately apparent, and something we started working on right away. We also, we did some really terrible trades early on. We traded Bitcoin for Diablo 3 gold, and you might not know, but Diablo 3 gold is like one of the most like hyperinflationary virtual goods of all time. So some guys in early 2011 probably made out like bandits on that. But anyway, that's kind of how we got into it. We had problems with PayPal. There was a time where PayPal shut down our account and we were completely out of business. And that you can be deplatformed by the banking industry and basically removed from business is a major issue around the world. And you still have things like Operation Choke Point and the politicization of money, and politicians using the banking system as leverage to basically make things illegal without actually making them illegal. So anyway, that's a long story, but that's kind of how I got into it. And now we're trading 30 different assets. We got 900 employees all around the world, and really psyched about the next 4 years of Bitcoin.
Awesome. No, thank you so much. I mean, that's why I really love this space. I mean, we have two entrepreneurs, technologists that came into the space, you guys, and, with slightly different backgrounds. But again, we see a lot of guys with, virtual goods backgrounds, and sort of seeing that pain point of, what's going on with the financial system and how, cryptocurrencies, Bitcoin can kind of solve some of these payment rails. And that's awesome. And, I joined the space because of the impact of Bitcoin on the emerging markets. So I really sort of see that connection. I think we should just kind of get straight into kind of what people want to hear about, which is, as Dan mentioned, I mean, efficient markets theory would hold that if we all know that halving is about to happen, that, it should be priced in. Is halving priced in? Does halving really matter? What do you guys think about halving now, and sort of the concept of where sort of price fits in?
And I do think that in overall the efficient market theory does apply sort of in the short term. And I think actually we've seen Bitcoin go from 5,000 up to 10,000, and sort of range bound now pretty fast. And I think there's the macro stuff that's going on. And I also think there's this anticipation of the halving. And so I think to some degree that's been going on. And I think, if you look at what's happening in the markets, whether it be on the large trader side or in the retail side, I think you very much see a mixture of kind of, sort of longs doing further long accumulation. And then this halving creates this greater retail awareness and activation of existing retail holders. And so I think that is in part responding, and that is the efficient market piece of this in some ways. And I think it is because people have seen what's happened in the past, and there's anticipation about that, and so that's had an impact. Now I think, I think the halving really does matter. I think it matters really significantly, and I think right now, in fact, it deeply underscores that this new global digital currency and monetary system is continuing to function as it was designed. Joey took us through some of the design elements here, and we have a global unit of account and a monetary system that was designed in a specific way. And every time the halving happens, it just punctuates that this is functioning as it was designed, that the monetary policy is a constant. And if you look at hash rate and you look at market infrastructure and so on, it's becoming more and more resilient in really significant ways. And now I think I've seen other people point out it's now on a monetary policy or an inflation curve that Milton Friedman would be proud of. The monetarists would be proud of. Bitcoin is one of the best monetary policies in the world, even from a monetarist perspective. And so I think the halving is important because we've crossed certain milestones, including that. And so that's high level thoughts at least.
Awesome.
Yeah, fully agree with everything Jeremy said. I would just add that I don't think Bitcoin is even priced into Bitcoin, right? Like most people have heard about Bitcoin, but they don't own any Bitcoin. They don't know what the future of Bitcoin is. I think if everyone knew about Bitcoin and the potential of Bitcoin and how great it was, the price would be like $1 trillion of Bitcoin, right? Like we would all just be switched over to Bitcoin and not be using anything else. So I think that there's a lot that's not priced in, even though it's predictable, like what the future is, right? Like 10 years down the road, the US dollar is going to continue to be printed like crazy. It's going to be totally worthless. No one's going to want it. Everyone's going to want Bitcoin. But that's not priced in because of perceived risks or perceived uncertainty about the future, about regulation, about how does the government respond in different situations as Bitcoin continues to develop, or how useful does it actually become. So I think a lot of things go into basically discounting the price of Bitcoin. And I don't think people price in these halvings. I think they think about it. When we think about the number of people that actually understand what the halving means relative to like all the people in the world who've heard about Bitcoin, they don't know. My parents have owned Bitcoin for years and they call me up and say, what is this halving about? Right. So I would say it's not priced in. We're still half of what the all-time high was. So, and just a month or two ago, Bitcoin was at 3,000. So, when is it priced in? Is it priced in at 10K? Was it priced in at 3K? I say it's not priced in. It's not priced in until things happen.
Awesome. And, I think what's also unique is, you guys have been in the industry, for a while, really since the beginning. I mean, how does this halving compare to the previous two halvings that you guys have been through?
You want to take that first, Jesse?
Yeah. Oh, well, let's see. As you guys mentioned earlier, obviously the quantity of Bitcoin being reduced is a lot less than it was in the prior instances. The price is a lot higher. You have mining technology has come a long way. The whole space has come a very long way. every 4 years, I mean, we can kind of look back and just, it feels like a lifetime of all the work and things that we've got done, and how much further along we are. So, I don't know that anything has changed super dramatically, and in a way that's unfortunate, because I think that we're being held back a lot by kind of slow regulators who are leaving a lot of gray area, which is preventing a lot of people from coming in who really want certainty around the space.
Yeah, I would echo some of what Jesse said, but I actually do think there are some key differences this time that I see, at least. I think the most obvious difference is the global macro context that we're in as this is happening. Literally, as this happening is happening, so from my perspective, like the optics of a global non-sovereign digital unit of account that is against the backdrop of just the massive scale of global fiscal and monetary innovation, it's pretty intense. And so that's a huge backdrop. As we know, as Dan pointed out, right, Bitcoin was born out of the financial crisis. It will come of age in this next financial crisis. We are in a financial crisis and a global economic crisis. And that backdrop and the level of government intervention is just really, really dramatic. And so I think that's significant for this halving. And I would say the other thing, which is, if I go back to 2016, I mean, I remember, for so long, everyone was talking about, institutional adoption, it's going to come, the market infrastructure is going to be there. And if I think back from 2016 to now, I mean, the market infrastructure is so much more mature than it was then. First of all, Bitcoin is now much more widely understood. It is actually much more broadly regulated, meaning it's sort of accepted as an asset, accepted as a commodity asset that, financial players can hold. The market infrastructure layers, everything from like qualified custodians up to, the largest, options and derivatives platforms in the world beginning to offer this. And then just internationally, those market infrastructures, the depth of liquidity, the kind of strategies people can execute, it's really evolved a lot. And so, I think in some ways back in 2016, it was really hard to argue that, kind of quote unquote, Bitcoin was ready for prime time. But now it's pretty hard not to argue that it's not. So I think in the current backdrop, with the ability for people and institutions to access this infrastructure, and then, this expansion curve of the actual legacy financial system, I think it's going to lead to a really different next 4 years. And I think that, all those factors are going to be drivers for growth in value over the next 4 years as well.
For sure. The infrastructure has come a really long way. And I think we can absorb a lot more users coming in now than we could back in 2016.
Massively, yeah.
That's great. You guys are obviously providing a lot of that infrastructure. And I guess the last question on halving, and it's great. I mean, people must be, from your panel, people must be buying Bitcoin. It's starting to move up and starting to hit 9,000 soon. But last question, what's your expectation for this halving and its effect on price?
So I'll go first. It's fine. I'm with Dan and Joey on this, and I believe that we're in a completely unprecedented time in terms of the global political and economic systems. I believe that this is going to continue to drive a pretty massive shift into digital currency. And so I think the next couple of years will likely see one BTC exceed $100,000.
Completely agree. I think if you can buy at 10,000 now, that's a massive discount.
I always tell people we're getting Bitcoin right now at 99% off. So, so Jeremy touched upon this a bit, but we are in a global pandemic, financial crisis, and this hasn't happened in quite a while. And coincidentally, Bitcoin halving is happening during this time. This seems like the perfect storm for Bitcoin to succeed. And if it if it doesn't succeed, I mean, what sort of scenario would it succeed in?
You're right. I think the things are primed for Bitcoin to take off now. I wonder, it's a very good question. What would it take? I think so many people don't understand the existing financial system, and they think printing money is free money and it doesn't come at anybody's cost. It's just handed out. I think until you have the system shut down somehow, or a huge number of people become excluded from the system, you're not going to see like a dramatic rush to Bitcoin. I think people still see it largely as a speculative asset or a store of value. And in a time like this with so much uncertainty, I think people are looking to what they know, which is cash. Like, I've got to pay my rent in cash. I've got to buy my food and my toilet paper with cash. They're not looking to hold a volatile asset. However good of investment it might be in the long term, people are thinking very short term right now. So I think that's one thing working against Bitcoin.
Yeah, just on this sort of concept, I sort of like to step back. The concept Bitcoin is like a honey badger, and it just doesn't care what's going on around it. At the end of the day, right, Bitcoin is just a piece of public software on the internet. It's a technical fact. It just exists in the world. And I think it's a very thoughtfully built technical fact, a very thoughtfully built artifact that I expect will grow and succeed over whatever time horizon makes sense. But I'm also I'm a bit of a believer in sort of evolutionary theories of society and the economy, and it seems pretty clear that sort of humanity birthed this seed as part of its survival instincts over 10 years ago. Satoshi Nakamoto, or that group, was channeling a set of things that they saw would be important for humanity. And I think that was sort of, from an evolutionary perspective, a mutation, if you will. And now looking at the world today, certainly you can look in hindsight and say, well, this is absolutely was born at the right time, and it's very clearly going to grow into a more mature organism, and is well suited to do that. But I think conceptually, like, it is just a technical fact on the internet, and it doesn't really matter what's happening around it. I think it will, from an evolutionary perspective, just continue to grow.
Awesome. And one question to that, in terms of, the possibilities of Bitcoin. I mean, a lot of people would, say, hey, Bitcoin is going to be digital gold, great store of value. Would you say Bitcoin needs to be more than that to be successful, whether it's for payments or other sort of things? Or do you think store of value, digital gold, like that's the thing for Bitcoin?
I think that's enough. Look, I would be happy to use gold in my day-to-day life to pay for things if I could also have it. It'd be very portable, or I could have a second layer gold, kind of a virtual or digital gold. I would be happy keeping, all of my money in gold rather than dollars, right? Like, who wouldn't rather have everything in their bank just be gold instead of dollars? So I think Bitcoin is better, obviously, because you can walk across the border with your life savings in your brain, right? You might not be able to do that with gold. And in fact, they've confiscated gold in the past. But if a guy shows up at your door with a gun saying, give me all your Bitcoin, you can just say, well, I forgot about all my Bitcoin. I don't have the memory of that, or it's gone, or whatever, it doesn't exist. So I think Bitcoin gives power back to people in a way that gold doesn't have. It's something that the government can't just show up and take away from you. Now, there are other terrible things the government can do to Bitcoin, but I see it as being superior to gold. We don't even know how much gold is actually out there, right? Like, we see banks like double counting gold, and they're selling paper gold that doesn't actually exist. Vaults have not been audited. Unless you're holding physical gold, in your pocket, I wouldn't trust it. So I definitely trust Bitcoin, which I can see and count and verify on a blockchain from anywhere in the world.
Awesome. Okay, and then another question, I'd say leading up to this run up, I mean, there was a huge news coming from one of the most well-known global macro investors, Paul Tudor Jones. He announced that they are setting themselves up to trade futures on Bitcoin. And then also another subsequent interview of him mentioning that it's a great speculative bet. He has, between 1% and 2% of his net worth in Bitcoin. So, I guess going forward in the next few years, how do you sort of see institutions thinking about and playing in this game, institutions versus retail? Like, we've been wanting institutions to come in, like, what are your thoughts on that? And of course, both of your companies are sort of dealing with, institutions in one way or another.
I would just at a high level, I would say, just as Bitcoin just continues to grow as a safe haven asset, a reserve asset, this broader store value thesis, and actually, I do think as it continues to grow as a transaction asset, because of that, as Jesse mentioned, like this fundamental digital utility value, I think that with that, more and more financial institutions are going to get involved. I think they're going to have their clients, whether it be, very large asset managers, such as, Paul Jones. But more broadly, I think more and more financial institutions are going to get involved in custody and providing liquidity. The sort of this march into six-figure BTC, prices is going to be accompanied by, and I think, very driven by more institutional capital that's focused on, long-term horizons. So long capital, at an institutional level that is, that can access mature infrastructure. I think a lot of that's is very much going to come from that set of capital. But, of course, given the continued volatility that you see in these digital asset markets, and I think there will continue to be a lot of volatility, it will of course remain an extremely attractive asset class for trading firms. So institutional trading firms, electronic markets firms, et cetera, I think it's going to remain significant there, and if not get, much, much larger than it is today.
Yeah, I agree. I mean, just anecdotally, in the last 2 months, we've seen a huge surge in new accounts from institutions. I think, again, I mentioned it earlier, something that's preventing more institutions from getting in is just the uncertainty around the regulatory situation. So I think many are in kind of a wait and see mode. Many may be trying to have their mandates changed to allow them to invest in these asset classes. But I do think it's coming. I think that more LPs are going to demand that their GPs invest in crypto. So I think it's kind of going to come from the bottom up, and the returns are just so hard to ignore. It seems irresponsible not to have crypto be a piece of your portfolio.
I totally agree with you guys. I mean, we're seeing quite a few endowments, reaching out and chatting with us about cryptocurrencies and Bitcoin and pension funds and other sovereign wealth funds of different geographies. So, this is starting to become a lot more, tangible for them, a lot more understandable for them. So I'm grateful that you guys are also seeing that. And another question, I'm going to start directing, some of these are coming from the crowd. I mean, directing some of these questions directly to you guys. Jeremy, I mean, Circle's played a broad set of roles in the Bitcoin ecosystem, payment platform, exchange, wallet service, trading venue. I guess a quick two-part question. What are you excited for someone to sort of build next? And how do you see the role of stable coins, USDC, in relation to Bitcoin going forward?
Yeah, sure. I can talk about that. In terms of what people can build next. I mean, I think one of the things I'm really, really excited about is the programmable money part of this, and people using digital currencies and integrating them and automating them in all kinds of ways. And I think we're seeing this sort of, there's sort of the legacy system, quote on banking, open banking kind of model, but then there's like actual internet money and actual, open permissionless infrastructure, and people can build on that. That's what's exciting to me, I think, in terms of what people are building next. And there's obviously a ton happening there in DeFi, but in many other things. On the second piece, the sort of role of stablecoins in relation to Bitcoin, obviously, we started off US dollar coin, and it is growing very fast as sort of full reserve, transparent US dollar stablecoin. And I think there's a lot of discussion around stablecoins right now, and I think for many people, looking at blockchains today, they look at stablecoins as sort of a killer app. It's sort of the first real killer app of public blockchains. You have the, store of value, unit of account, capability of $1, which is highly attractive, as we've talked about, to many, many people in the world, not just the people who need to pay their bills and pay their rent or transact with each other, but all around the world in this sort of pyramid of risk that exists. There's a lot of problematic currencies, a lot of problematic sovereigns, a lot of problematic parts of the financial system, and sort of at the top of the pyramid is these sort of dollars. But I think what makes digital dollars like USDC so attractive is that it's not fractional reserve commercial bank money. These are tokens that are fully reserved, and they're fully reserved against essentially short-term U.S. government securities. And so again, when you look at the pyramid of risk that exists today, you can argue about the creditworthiness of the U.S. government and whether those dollars themselves are going to become inflationary. I think that's a very legitimate question, but they're still, for sort of everyday transactional utility value, I think stable coins and things like USDC and digital dollars are going to grow very, very fast because people are going to want to transact with each other in a unit of account like that, and they're going to want to transact with the benefits of digital currency, which is instant settlement, extremely low cost, no counterparty risk, global reach, all those kinds of things. Now, relative to non-sovereign money like Bitcoin, I think these are both in an adoption curve. I think non-sovereign money like Bitcoin is going to continue to grow in the amount that's stored in that unit and also in its transactional activity, while at the same time, stable coins are going to explode in use as well. So that they're not necessarily at odds with each other, even though conceptually, if you're looking at long-term monetary implications, you could say that they are in some ways. I think, and this is my own view, that long-term, and you can kind of pick your time frame on this, that we may get back to something like the gold standard. And if you remember in the time of Bretton Woods, the concept of the Bancor, which was John Maynard Keynes' concept, was let's not just be dependent on one country's sovereign currency that's pegged to gold. Let's come up with an international unit of account that could be widely accepted around the world that was still pegged to gold. And so I wonder if we'll see emerge, maybe even out of the current global crisis that we're going into, something along the lines of a basket of the least risky reserve currencies, but indexed to some amount of Bitcoin. So Bitcoin becomes the gold rather than gold becomes the gold. And so I could see over the long run, Bitcoin really being that foundational component of a transactable international currency that still is tied to units of account that, say, the treasury departments of major sovereigns would be using for things like taxes and the like.
Awesome. That's great. Thank you so much. That was really insightful. And Jesse, I mean, speaking of Kraken, I thought one of the most interesting strategies that Kraken has done was, starting off in the US, but then, buying an Australian exchange and then, setting up in Japan. I know that you guys are in the Middle East too. And so it's great. I mean, Bitcoin's global, Jesse Powell, Kraken's global. And I'm just kind of curious on, I guess, two things regarding that. I mean, how have you seen views of Bitcoin and cryptocurrency in each of those markets? How are they different, if any, versus the US? And I guess the second question on exchanges is, do you see sort of consolidation happening?
Yeah, so every geography around the world is different. Every regulator is different. Japan is a really tough market to get into right now. I mean, they launched this license, and immediately following that license, 2 domestic Japanese exchanges got hacked. And each time they got hacked, it was like the application went from 200 questions to 400 questions to 800 questions. And, I don't know if they're ever going to be comfortable with actually, exchanges operating there. We'll see. We've kind of been at the finish line there in Japan for a long time. So we'll see what happens there. But, we've got a global client base. A big part of our mandate is just making Bitcoin more accessible. And that means domestic funding options. That's really what's kind of driving the formal entry into markets and the engagement with the regulators is local banking. And usually being able to have a local bank account means you got to have some kind of license. So that's what we're pushing for. We've got Australian dollars coming soon. We're looking to expand in more geographies to basically just give local banking options to people around the world who may already be our clients. They may be using us through sending international wire transfers or through, they may have dual citizenship, or they may have another residence in another part of the world. We've got a lot of people who are expats of their home country living somewhere else who may have bank accounts in 2 places, who, they want to buy Bitcoin with euros, and then they want to withdraw Japanese yen in Japan because now they're living in Japan. Bitcoin's a global phenomenon. Largest markets for us right now are North America and Europe. But I mean, Asia is obviously a gigantic market, just one we haven't tapped so far. But it's growing all around the world. It's hard to tackle everything at once, but we've got a long list of countries.
And do you see consolidation happening within the exchange space even more?
Yeah, I think there'll be more. I mean, there's already been quite a bit, but new exchanges are popping up on a daily basis. So they're not all going to make it. We actually work with a lot of local exchanges and, who are basically brokers. I'd say not so much exchanges. And, there's some markets that just are not worth going into as a foreign business. You need to know people on the ground there. You need to have relationships with regulators. You need to know the language and culture. Some markets are just very difficult to enter for how large they are or how small they are. It may not be worth it. So we prefer to work with partners in those markets. I think people, we've seen a few exchange hacks lately where you'll see people make comments like, well, I wanted to support my local exchange. And, I don't think people really understand the kind of the base infrastructure cost of operating an exchange or, a crypto custodian. It's massive. Like the Quadriga in Canada was like 3 guys, right? And to give you a sense of like how crazy that is, our security team alone is like 35 people. So how are you operating an exchange in a way that is secure, reliable, robust, meeting regulatory requirements and all of this stuff, on a shoestring budget with like a few guys? It's just not possible to do. So I think, as much as people want to support their local business, you have to kind of think of it as like a Fort Knox, right? Like, okay, you're going to deposit all your gold with somebody. Is it going to be mom and pop at the corner shop, or is it going to be Fort Knox? And as much as you want to help out mom and pop, I think that you got to be thinking about, what does security really cost in this industry? Where are you putting your money, and how much can you trust that?
That makes a lot of sense. I mean, when I first joined Pantera, Dan mentioned, hey, we got to go out there and try to find these local exchanges. And, we do a lot of work to vet these guys to make sure that they can turn from, usually it's more than a team of 3 when we do invest into them. It's usually a team of 10 or so, but can they get to a certain level that you're at for the US? And, we do think it is very valuable to have the regulatory buy-in, the security, the local marketing, et cetera. And, there's always that sort of feeling of, hey, I want to support the local player and guys that I'm familiar with. So, hopefully you guys will be buying all those companies. And one question that we've gotten quite a bit, and I'll throw it out to both of you guys, but also Joey in case, he wants to chime in. But, this one's been asked just because, again, this is halving and rewards are being halved for miners. And so, what is the impact of this having on miners? Are you guys hearing anything from the mining community? Are we going to see reduction in mining activity, profitability, consolidation? Like any thoughts on the miners? Because I think people are just kind of wondering, wow, like what happens to those guys now?
I mean, anecdotally, I've just heard that miners have actually been accumulating Bitcoin in recent times. But obviously it's going to impact profitability. However, you'll have a lot of miners shut off because they are not going to be profitable anymore. So I think the guys that are really running, mining is an economy of scales business. And, the guys that are running the best, latest chips that have the cheapest power are going to be the guys that continue to do well. And the guys that have, the older generation of chips or have a little bit more expensive power are going to fall off until they find new hardware or a better deal.
Yeah, I would say the same thing. I mean, it's a fiercely competitive. It's one of the incentive design mechanism of Bitcoin just makes it inherently, just go into this like deeply vertically integrated kind of scenario. But yeah, certainly. The big players in this space are all, have very deep, long conviction. They're not just doing this to quote unquote make a buck. They're doing this to make Bitcoin, and they're long Bitcoin, and they accumulate Bitcoin, hold Bitcoin, and certainly there are going to be firms that cannot compete and generate a net operating margin from this, and they will stop. But I don't think those firms will even leave the ecosystem. They'll just go into something else and do something else. But I agree that, probably if you looked at the biggest players with hash power, I would think that they're also in an accumulation phase and have been.
Joey, do you have anything to add or?
No, they pretty much said everything. I mean, I think the only thing I might add is maybe, the one other kind of element to it is getting access to the best hardware, latest hardware quickest. So that's one edge that a lot of miners have. So, whoever has access, as Jesse said, cheapest electricity and kind of best, operating cost business is going to win. But also whoever has access to the latest chips the quickest is going to be the miners that last through environments like this.
Awesome. We have a question for Jeremy here. Considering the adoption of stablecoins in emerging economies, how do you envision the future role of governments in this new context? Now, how do you see governments and central banks reacting to this impact on monetary policy?
Yeah, I mean, so like the dollarization theme is one that obviously it predates digital currency, and in fact, it's been a major theme from a global macro perspective. It's been a major theme for emerging market central banks for a very long time, and even in the current financial crisis, in some ways the Fed is sort of the global central bank, and they have these aggressive dollar swap lines with central banks around the world to get more dollars into distribution. And so, these issues are not unique to stablecoins. However, I think, the question, I think it does raise an interesting issue, which is, as I like to say, because digital currencies are these sort of digital bearer instruments, they're like digital cash and they work over the internet, people everywhere can kind of vote with their smartphones for what economic system they want to participate in. And if there's easy ways for people in markets that have, say, collapsing governments, collapsing fiscal and monetary regimes, and people can vote with their smartphones that they want to participate in the dollar economy, they're going to be able to do that. And I do think it creates issues. And I do think there is a long-term kind of forcing function towards global currency models that are built on fundamentally stronger underlying credit risk, if you will. And that is not something that's going to happen slowly or overnight. I do think there is some risk that, just like, in markets where there are, attempts to have significant capital controls, that there are, limits on Bitcoin as well. You may see, risks for people who are using stable coins from a legal perspective. But I haven't seen anything to suggest that that's going to be a major issue in the short term.
All right, and then I got a question for Jesse. I'd say I feel like every single week I'm getting a new pitch for a decentralized exchange, decentralized spot exchange, decentralized derivative exchange. I mean, it sort of makes a lot of sense. I mean, this whole ecosystem is about decentralization. How do you sort of see decentralized exchanges fitting in with, what you're doing at Kraken? And do you see that being complementary? Do you see it being competitive? Like, how do you see it evolving?
Yeah, I think it's complementary. I think it serves a demographic who's sort of on the bleeding edge of what's happening in crypto. Obviously it doesn't serve grandma who wants to buy her first Bitcoin from her bank account or from her credit card, right? So, which is like 99% of the people in the world today. I think we're still a long way off from the average Joe using a DEX. I think DEXs are still technically a long way off from really being extremely trusted and reliable. I mean, we constantly see issues come up with smart contracts where the exchange has been drained, the DEX has been drained, or the contract has been drained. That kind of stuff scares me. Personally, I don't have a lot of money exposed to smart contracts. And I think it's going to be even longer for most people really to install MetaMask or whatever and get involved in Web3 and use these decentralized exchanges. But I think it's great that they're out there. It's possible Kraken at some point will hook up to these DEXs and we'll do some sort of liquidity sharing, or maybe Kraken itself develops a DEX at some point. But for us, that's a long way off. Right now, we're really focused on bringing people over from the traditional system just into crypto. And if they want to go trade on DEXs from there, that's great. But that's really our focus right now is bringing kind of the 99% of people that don't have Bitcoin right now onto the system.
Great, guys. We've pretty much taken all the questions and we are past the hour. There's so many people that stayed on, so we decided to give you guys a little bit more time and give them a little bit more time. But really want to thank you guys. I mean, this has just been amazing. And I want to hand it off to Dan. He might have some last words for everyone.
Paul, thanks so much for moderating the panel. And Jeremy and Jesse, you guys are awesome. It's so fun to hear your views. And every time I hear it, I get fired up again. And the two thoughts I wanted to amplify are, Jeremy, your view that it takes a while to get ready for prime time. Bitcoin and all of crypto have gone through these manic, it's going to change everything overnight. Yeah. And then we wake up in the morning and it didn't really change everything and we're all bummed and it goes down 85%. And it takes a while. And I think that's the same thing with the halving. It's the same thing with institutional adoption. There isn't a light switch that we're just going to flick on. And tomorrow morning, it's all going to go to the moon and it's going to do everything. And then Jesse, I love your line. I'm going to quote it all the time. I don't think Bitcoin is priced into Bitcoin. I love that. And with that, thank you all for participating.
Thanks for having us.
Thanks, everyone.
Cheers. Bye-bye.
Cheers.